Hey everybody, welcome back to the Journey to $1 Million series. My name is Adam Reiser, and this is the 13th video in this series of me documenting my starting journey, or my journey really from $1,300 in starting balance of a Forex account all the way up to $1 million in an account that I'm trading with. And so this is the fifth weekly recap. I learned a lot this week of trading my $500,000 account, and this is the 13th video of the series altogether where I'm really just trying to be as transparent as I possibly can to show everybody what this process is like as you grow to become a successful trader. And so we're going to go right into this. I learned a lot this week, as I mentioned, and you're going to see why. So as you can see here, I had a loss of about $2,900 this week. So basically all of the progress that I made on this $500,000 account is almost completely wiped away. I'm down to $372 in profits, $500,000 and $372 in equity. So I'm only about $372 in the equity floating. I'm currently down pretty significantly in my max loss because of my sliding equity scale of where I can actually go down to, because I was up $3,000. I was up $3,263 at one point, and since I've lost $2,809 this week, I'm currently down about 2,891 for the week right now, and it's not very good. So I was reporting a profit for the past 3 weeks, and then out of nowhere, I lost basically all of the profits, and it's not very good. So we're going to go into my trades here in a second. You're going to see what I took. As you can see, I had a lot of losing days, a lot of trades to go over. This was the first week in a while that I over traded, and I've got my journal here that I'm going to go through as well. But as you can see, my profit factor is just above profit, just because I'm still in the profit. I've got a 33.93% win rate. I've taken 56 trades, which is up about 24 trades this week. So I've placed almost more than 1/3 of the trades on my account this past week. Obviously, the more I trade, this goes back to the $250,000 account where I over traded and I lost a lot of money. And I'm going to nip that right in the bud right now. But I still have a 2-to-1 risk to reward ratio. Actually, this week I still kept about a 2.23 RR for my trading, but not very good overall. So we're going to go into detail on all these trades. Before I do that, I want to show you what I was looking at for the week. So as you can see, it did not break above to this new area. It did not break above, but it actually came down and then closed back up. I'm anticipating possibly a little bit more choppiness going into this week, maybe another retest of this low. Maybe even this could be the week where it retests a little bit down one more time before it launches up. And but FOMC week last week really caused a crazy market. But this is the week last week here. You can see it failed to break a new high, created a new low, and then it closed right back up again, bounced off of this previous structure very nicely. And I missed this entire buy up. That was on Thursday during FOMC day, where it went up 350 pips. I'll show you what that looks like. So this is the start of the week right here. As you can see, it broke above this candle and then it closed below. And this would have been a really good short right here, broke above this high and then closed down. And then the next day, this is actually, I'm starting to notice this type of candle right here being a very bullish candle. And basically what happened is obviously continued to go down, but it basically took everybody's stops out of the buy side. Plus it gave a lot of sell side liquidity here, and just launched up. And so I'm going to go down to the 4-hour time frame here, and this I'm going to show you my markup. So this box right here is actually this week. I set this up in preparation for this video. So this was the start of the week right here. Yep, this is Friday, so this is the start of the week. So as you can see, it was a little range bound and failed to break through this high, which would have been a very good sell-off opportunity. Held this zone right here that's been created 1, 2, 3, 4, 5 times now. Came back up, could not break through this resistance or this previous structure, and then rejected down to the downside. And then it came back to this area that I was talking about beforehand on the daily time frame where just really held. So you got this previous resistance, and previous structural area right here, just really nicely bounced off of all this whole area, and then kept going up. And so we're going to go down to the hour, and this is where we're going to be using this for our analysis, along with my my daily recap. So we're going to kind of, there's a lot of trades here. For some reason it keeps resetting my period, so we're going to reset this again here, and we're going to go through all these trades for the most part, and we're going to just kind of go through the bloodbath a little bit, and so that way we can all learn together here. So as you can see, this is the Monday. Monday I placed one trade. Monday was the day right here where it was kind of range bound a little bit. Tuesday started the actual sell-off. Monday right here, it failed to break through this area, and this was a very nice sell opportunity that it did not capitalize on. Right here at 1961 right here, thinking that I could potentially break through, especially after this close right here on the 8-hour 8 o'clock candle. Thought I was going to probably try to hold this area since it had one wick down, another wick down. Maybe it was going to try to force its way up, but the sell pressure was too much. It didn't have the liquidity necessary to keep going up, and so I was thinking that it was going to be able to go up. Didn't want to risk too much on this trade. I did open up a what was this, Monday? Did open up a 3.5 lot, but I closed out as soon as it failed to break through. This trade did go up, as you can see here. This trade did go up, about 2 pips, 20 pips. Would have been a $700 trade. Came back down to break even. It is what it is. I lost in this trade, and I should have probably flipped my bias right here and wrote it down, especially after it failed to break through. This would have been a really good sell opportunity. I did not flip my trade around, and that was a nice missed opportunity there. And you'll see a common theme of me not flipping my bias for this week, because I was wrong a lot. So we're going to go to Tuesday now. Tuesday was a very crazy day. Tuesday, we did have some news. So if we go to Tuesday, the 20th, by settings. So as you can see here, we're just going to open up all the trades, all the candles of the week. So you see Sunday, Monday, Tuesday, Wednesday. Tuesday was actually the 13th. No, you're right. Monday I traded. 13th was 13th was actually here. I'm sorry for this, but I just wanted to double check here. So Tuesday was the 13th. Yeah, there wasn't any news. It just failed to break through this area and just completely rejected the downside. Interestingly enough, I could have swore I thought there was news. Maybe there was. I think there was news on Euro. I'm not sure. Let me see here. If I go to filter and I do this as well. Tuesday. Yeah, so Tuesday we had really bad news for Euro US dollar building permits. I guess there wasn't that crazy of news, but it just created a lot of volume here. I think it was trying to push up. So on Tuesday, as you can see here, it was trying to push up, and I thought it was going to keep moving up, and had this really nice liquidity wick going up. So I was like, okay, you know what? I tried to buy on that breakout, but really badly. As you can see here, it was a 1.75 lot. I tried to buy, and it immediately rejected on me, and I close out that one as a loss at 456. That one barely even went to profit. This is just a really bad trade. And then I tried to open up a sell right here as soon as I saw that it was rejecting, which I'm very happy that I reversed my position. But as you can see, I lost $456 just on this stupid trade right here, opening up a 1.75 lot. And I was like, you know what? That was a stupid trade. I should have brought the breakout right here, 165, as soon as it broke through this structure right here. So as soon as it broke through this area, that would have been a 166 entry, or 1966. Just going up to 1970, that would have been a 40 pip trade. That would have been a $600 trade. I bought way too late, and I lost money on that position. Opened up, I flipped my bias. I was like, okay, obviously this is not going to go up anymore because you have been this nice giant wick going up. I flipped my position around and caught the sell side, thinking that it was going to keep going down. I opened up another short, and that was actually a loss here. And so I was like, okay, you know what? And you can see, you're going to see a very common theme of me trading a lot, not knowing where this direction was trying to go to. And so I bought here, sold here, lost money, opened a short here, caught a nice wave down, opened up another short down here, thinking that it was going to keep going down after it broke through this previous area. And then it ended up rejecting a little bit. So I lost $189. So I said, okay, you know what? It is what it is. I opened up another sell right here, or a buy, actually. Opened up another buy. I was like, okay, maybe this is going to keep going up. Opened up another buy, rejected. And I was like, oh, man, I'm completely wrong here. So I waited a little bit. I said, okay, you know what? Let's just wait to see where it's going to go on, if it's going to keep going up or keep going down. As soon as it broke through this structural area at like 9:30 in the morning, I said, you know what? Let's open up a short. This is obviously going to keep going down. And it did keep going down, but I closed out way too soon. I had already lost too much money. I didn't want to lose too many more profits. And so, as you can see here, I closed out way too soon. 1951 was my take profit area. 1951 would have been hit if I had held on to it. That would have been a nice, what is that? 1957 to 1951. That would have been a nice $1,200 trade. Would have put me in the profits for the week. Especially since I was pretty much up. I basically broke even on the day, and I said, okay, you know what? Just wait till the next day. But you'll see a trend. I just couldn't find a groove in the market this week, and I'm going to recap why. I just didn't have my head in the game when I go over my journal entry from this week. But long story short, overtraded, lost lost all of my profits that I would have made off these trades. I kept my risk in check for the most part. My average win was greater than my average loss, but I just overtraded, and it broke my rule of having too many trades per week, 1 to 3 trades per day per trading session. And we're just going to go to the next day as well. As we go to the 14th right here, this is the start of the 14th. You could see I placed quite a few trades on the 14th all the way down to here. So I placed what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades on the 14th. And just over traded the heck out of the day. My average, I walked away on the 14th with like, I think it was like $15.25 in the profits. I think it was, or in the negative. I over traded a little too much. On the 15th, you'll actually start to see the 14th. You'll start to see that there was news on the 14th. Let me see if I can go filter this back down to what I like to see here. So on the 14th of June, we go down to the 12th through the 22nd, June 12th, the 18th here, apply settings. Yeah, okay, so there was news on the 13th. I'm not sure why I was messing that up right here. So you can see there was news on the 13th. It was really bad for the dollar. As a result, that caused the move up on gold, but that's the reason why I bought. Let me go back here, reset that. So I tried to buy on the bad news, and then it just wasn't, I guess the news, it wasn't that bad, right? It shows red, but it wasn't terrible, right? At the end of the day, it did come in lower CPI, but it was still 4%. So I said, okay, you know what? Maybe this could be, instead of saying, okay, you know what? This was less than expectations. This is probably going to be good for the dollar. I thought, since I saw red, wasn't thinking properly, didn't really have my head in the game. And that's why I bought. And that's what caused the whole loss area of my trades for this week. Then if we go to Wednesday, we had FOMC that day. I mean, we had tons of news this week. Look at all the news we had this week. And coming off of a week where we didn't have any news, price action wasn't as choppy or as volatile. I guess I have to adjust that going into each individual week. So on Wednesday, you could see we had news at 8:30, and it was very bad for the dollar. And so I thought I could buy, but for some reason I thought it was going to keep going down. So I figured out, I kept shorting it right here. This was the 8 o'clock, 9 o'clock candle. As you can see, it shorted. It went down, then it went back up, then it kept going down. So we're just going to go through each individual trade here. So I opened up a short here, didn't work out. Open up another. So I close out of this position right here on the 14th. This is a little all over the place, guys. I'm sorry about this, but this is just a mess of a trading week for me. But I opened up a short for some reason, really bad short here. It kept going up. And I lost $544 on this trade. Just a really bad. I was trying to time a reversal and anticipate a reversal rather than wait for actual confirmation. So you had this bullish candle, this bullish candle, this bullish candle. I said, okay, after I lost this $544 trade, I said, okay, you know what? Let's just wait for another opportunity. I placed a short up here. This was previous structure here. Let me see if I put a line right here. I put a line here. You'll see that this was well below structure. Man, I don't even know what I was thinking on this trade, to be honest. What is this? 1957. So I was maybe anticipating this line to hold. As you can see, this was structure, potential resistance, and it was resistance. But I entered in way too soon. Opened up a short, closed out of my short, but it ended up holding this area. So I opened up another short here. So as you can see, this was the second short that I opened up. Got stopped out right away. Opened up a third short, and it came back down, took profits right here, and made $784 in the trade. Opened up another sell right here, ended up holding. I was like, you know what? Okay, let's just wait to see some more clarity. Opened up another short, ended up going in profits. This was a 2-lot right here. This ended up going from 1957 down to 1955 area. That would have been a $400 trade, but it ended up coming right back up. I just wasn't managing my positions very well. As you can see here, I just didn't have the good groove in the market this week, really, like at all. I wasn't following candle closures. I wasn't following candle structure. As soon as I saw this try to break out again, probably should have closed out at least a little bit in the profits because I was already over trading this week. Should have probably walked away. But I was just in this revenge mode style trading, just very stupid. And I closed out that trade in a loss. Then I tried to open up another sell down here, thinking that I was going to hold this area, which it did. And I closed out again. I said, you know what? Let's take a break, wait for the trade to work out favorably. And so going into the 14th, this was around, I said, okay, just wait till FOMC, save some of your money so you can trade FOMC a little bit. I was negative on the week, but I still, on the day, I was down like $900. So I said, okay, you know, I still have about $600 of wiggle room. Let's just try to see if we can get a good entry on FOMC. And I tried to buy here on FOMC. That was this buy. Anticipated a buy because it was bouncing off of this structural area. So I said, okay, maybe this could be a buy. And it kept going down and down and down. I was like, wow, okay, what am I doing? So I opened up a buy, closed out of the buy, opened up another buy, closed out of my buy down here at another loss. So you can see I lost. And then I said, okay, you know what? This can't keep going down forever because FOMC, just so you guys know, FOMC, basically they were going to they were not going to raise interest rates, which means that there wasn't going to be as much demand for dollars because interest rates, when there's higher interest rates, it's good for the dollar because that means bonds go up, treasury yields go up. And so since they didn't raise interest rates, I thought gold was going to go up. And I had the right idea fundamentally, but just the amount of volume here from FOMC, because they weren't going to raise interest rates, it was just a massive sell-off because it was continuing the market trend. And I took a Hail Mary trade down here. I said, okay, this was 1939 down here. I bought right down here at 2 o'clock. And I was like, okay, this could potentially hold down here. Prices of interest, right? It can't keep going down forever. There's got to be some sort of take profit opportunity off of this massive sell-off, especially since it rejected down here on the 2 o'clock. I waited for it again, and it came up. This was my winning trades. It put me actually in the profits, like $4 on the week or on the day. Ended up taking this $2 lot, closed out at $992. And I opened up another $2 lot since this was broken even. Open up another $2 lot on this rejection down here, and it ended up going up even more, $1,200. This would have been a really good trade to capture back some of my losses, but as you can see, I was already over trading so much for the week that I should have just not have traded at all, right? But see, the thing is, Mark Douglas says the worst thing you can do is reward yourself for doing something bad. And as you can see, I took a loss. I should have just not foregone any opportunities and just not traded for the week. Or any more for the day, and as a result, just not more for the week, just because I had been already in this mindset of over trading. I should have just taken a stop here and not traded for the rest of the week, and I did not, because I wanted to make back some of the money that I lost, or just end the week as a profit, because it's what I've been doing for the past 3 weekly recap videos I've recorded for you guys. But you can see that these were actually some pretty decent trades here. There were kind of Hail Mary trades. I mean, this was actually a pretty decent buy right at the bottom of this wick. And I ended up catching a nice little move up, but I did reward myself for over trading. And as a result, I kept on over trading for this week. And we're going to go to Thursday, which was just an absolute bloodbath. Thursday, we had a really big bullish day. So this is Thursday, 8 o'clock in the morning, right down here, 8 o'clock. We go look at the news. 8 o'clock on Thursday, we had a bunch of news that was really good for the dollar. And the manufacturing index reported something very, very positive. And so that, plus also the bounce off of this structure here on the daily time frame, it should have signaled to me that this is potentially a trend reversal, especially on the higher time frame. I had been anticipating some sort of rejection off of this area for quite some time now. For the past few weeks, you can see 1, 2, 3 rejections off this area. Just happened to take some stops out prior to going up again. And so I should have been more cognizant of it, but I was just not in the mindset to be able to take advantage of that. But this day was a very significant day for gold. Just so you guys know, 1925 all the way up to and let's see if we can find the end of Friday. So Thursday, it went from 1925 all the way up to 1959. That's a 340 pip move. 340 pips on a dollar lot. That's $3,400 on a 2 lot. That's a $6,400 trade on a 10 lot. That's a $340,000 trade. But you can see here, I was anticipating some sort of reversal to potentially continue with the downtrend. And so this is the bloodbath. So, I mean, it's difficult to even go through all these trades, guys, to be honest with you. This is just stupid. I was just not trading well. I tried to open up a short here, covered, open up another short here, thinking that this was going to return around, covered, open up another short here, covered. And I don't even know what to say. I mean, it's just, I was anticipating rather than waiting for confirmation. Anticipated this reversal, ended up going up, bullish. I mean, why would I sell into this? As soon as I saw this break through this structure, the structural area, that should have been a buy. Even if I opened up a buy right here, right on the hourly time frame, that still would have been what 190 pip trade right here. As soon as it broke through this area, rejected to the downside, I mean, just stupid. And I'm sorry if this video is kind of all over the place. It's not like my standardized video, but you could just see, like, there's no real justification behind these trades, right? I was just opening up shorts, opening up shorts, opening up shorts, opening up shorts, shorts. Every single sell, everything to think, every trade was a sell, and it was a buy. This was a buying day, and I opened up shorts and shorts and shorts. I mean, I never opened up shorts prior to last week. All of my trades were buys, and I finally started to focus more on the sell side on the wrong day. And I lost just on Thursday. Let's just go to Thursday. We do custom period. Thursday was the 15th. Just on Thursday alone, I lost $2,700, almost $2,800, trying to catch the sell side, anticipating the sell, anticipating reversal. 1940, this was previous structure. And then these trades were just stupid, right? I mean, it's a little difficult to see on what I was looking at, but like 1941 rejected this area. I thought this was going to hold, just closed right above, right? 1946, thinking that it was going to reject off this area, just kept going up. And I was like, okay, you know what? This is going to probably keep going up and up and up. I tried one more time at 1951, which is this area, right? Which is another structure. So I was selling at structure, right? At least I wasn't just opening up arbitrary shorts like 1941, 1945, 1951, right here, 1941, 1942 and change, 1945, 1946, 1951, 1952. I wasn't opening up arbitrary shorts. I was waiting for structural areas. So I can say that I was opening up at point potential prices of interest, but I was anticipating rather than actually closing, going off of market structure and confirmation and rejection candles. And I just kept shorting into this giant big move. And the market, if you try to argue the market, you will lose. And that's a quote I wrote down on this from my book I'm reading right now, Market Wizard. So as you can see, it was just a tough week overall, guys. I mean, I just didn't trade well, and there's no other way to put it. I just was stupid. I let my discipline slip a little bit, and as a result, I paid the price. I lost all of the profits just in one day. I mean, if you go look back on the 14th, you'll see that I overtraded, but at least I walked away with here. Let me see, 14th to the 14th. And at least I walked, even on Thursday, I overtraded, but at least I walked away in some profits because I was able to catch these nice big trades here. But overall, I mean, this is just not a good way to trade. It's not sustainable. And as a result, I paid the price. I lost overall for the week. I lost. I have to go to, because this doesn't count my really bad day here. 15th. Technically the 16th is the Friday, but I didn't trade on Friday. You can see I was like, okay, you know what? I lost too much money this week. It's not worth me trading on Friday. And I did not trade on Friday, even though there was pretty significant opportunities on Friday, right? I mean, on Friday, we had some more news at 10 o'clock. And that was actually really good for the dollar on Friday. You see here, 10 o'clock, big push up, failed to break through, and it just kind of kept chopping. And just, I mean, guys, what I could tell you from this week is just don't do this, right? This is exactly why Raja Banks talks about only placing 1 to 3 trades per week. And I was doing really good with that for the past 3-4 weeks, not over trading, not revenge trading, none of that stuff. And I just couldn't, I wasn't in the headspace for it. I had some things going on in the business opportunity that I'm working on right now that was just messing with my mentality. And as a result, that lack of clarity, that lack of focus transferred into my trading, and I couldn't get into rhythm. I was out of sync myself personally, and as a result, that caused me to get out of sync with the markets. And I didn't do well. And so I'm just going to go straight into this journal recap of what I wrote down, because I have, I'm journaling every single one of my weeks right here. As you can see, this is my trading journal. And, I've got journal entries and so forth. This is just all over the place, guys. I'm sorry. This is just, this is me trying to be as transparent as I possibly can with my journey. And it's a little all over the place right now because I've reflected on this week a little bit, and all I could say is that I just didn't really perform, and so we're gonna go into my total P&L. My total P&L for the week was minus $2,809.25. I took 24 total trades. I was 5 for 19, which has a 20.8% win rate. Those wins, I had 5 wins. They totaled $3,999, so just shy of $4,000 of wins. I had an average of $798 of wins. And my losses, I had 19 total losses. I had a total of negative $6,799.35 right here. I'm not sure if you can see that. but my average loss was $357.86. So I can say that I kept my risk in check in a sense, where my average win was still 798. My average loss was 757. So I had a 2.23 RR for the week, but I lost so many trades that I actually ended up losing money this week, and so that's not good. But that's going to recap what I did well. I kept my risk in check. I didn't lose more than $642 on any single trade. As soon as I saw negative $600, which is my rule, I had to close out of the trade. Although I placed too many of them, and I did break my rule of not losing more than $1,500 in a day. At least I did follow that rule of never losing more than $600. I'm not going to just let a position float and float and float. That's something I've already gotten out of me, and I'm glad that I did that, because it could have been way, way worse. I probably could have gone in the negative equity side. So I did not trade on Friday as well. I told myself I broke my rules on Wednesday. I still traded on Thursday, and I should have not done that because that was my biggest losing day. Could have probably walked away with a little bit less in profits for the week, and I would have had a much easier video recorded for you guys. But because I did break my rules on Thursday, I said, you know what, Adam, keep your equity. You're obviously not trading well this week. Just don't trade on Friday. And I did not trade on Friday. So I'm proud of myself for told myself I was not going to trade on Friday and did not trade on Friday. So I'm proud of myself for doing that. And so, but those are the only two things I really did well. I kept my risk in check overall for the most part. I didn't lose too big on one trade. And I also did not trade on the day that I said I was not going to trade as a punishment for not following my rules. And so what I can improve is that I have to go back to only placing 1 to 3 trades per day at a maximum. I should not be trading if I'm uncertain of the market direction. Just wait for confirmation. Just wait until there's no harm in staying on the sidelines and waiting for a good setup that might fall in line with what I'm looking for. I have to trust my instincts more, right? I was trying to catch moves, anticipate moves, but I wasn't really following through with my instincts, and that's because I just didn't have my head in the game. I should flip my bias if the initial trade idea was invalidated. I did that on the other day on the first one of the first days of the week. I caught a buy, ended up losing on that buy, and I said, okay, you know what? This is a short, so I opened up a short and I made that money back. But then I just over traded to the negative, and I did not flip my bias on Thursday when I had that really, really bad losing day, where I lost $2,700. I just tried to keep placing shorts and placing shorts and placing shorts, and obviously it was a buy. I don't know why I just didn't flip my bias on that day. So I have to be consistent with, if I am going to flip my bias, I have to be consistent with flipping that bias. I also have to be more disciplined and patient, and I have to trade prices of interest, not anticipate prices of interest, but actually trade those prices of interest. And I have to wait for confirmation. And so funny enough, about 3 of those things I said I need to improve on are my trading rules right here, which I usually review prior to going into every single trading session. But I did not review these rules. And as a result, I did not follow them. Interestingly enough, right? I usually do review my rules every single day prior to trading. And, I didn't review them. And so that's something I'm going to do to implement prior to my pre-trading routine, is making sure that I'm in a correct mind state. Mark Douglas says to ask the question, am I ready to wake up and make money in the markets today? If the answer is no for any reason, then don't trade. It's not worth it. And so also on top of that is I usually review my rules, and I did not review my rules this week. And so that's the reason why I broke quite a few of them. And so what I learned this week is one day or 1 week can take away all the progress that you've made, right? Or that I've made. So consistency is the most important thing of trading. Mindset, of course, as well as anticipating and knowing the market structure and everything. But if you're not consistent with your rules, you're not consistent with your system, then you have no real information to base your trading analysis off of. And so I need to be more consistent, and I was doing pretty well with that, but I broke the rule once and I lost almost all the profits. And I am proud of myself for not blowing my entire account. That's something I would have done, with the previous $250,000 accounts and the $100,000 account, is I would have just kept over trading and just been like, screw this, whatever. But I really want to make this work. And I said, I'm not going to go backwards too much. And so what I also learned is I need to reread my rules prior to each trading session, make sure that I follow a proper pre-trading routine. I need to put myself in the correct state of mind to be able to take advantage of the markets as they present opportunities to me. And that's something I did not do properly. I need to trade only when my head is in the game. I cannot trade when I'm not in the head. My head's not in the right mind space to do so. and it's actually better to sit on the sidelines than to blow your capital. And so those are all things that I've learned, that I know, but I reinforced by making these decisions these weeks and this week and just messing up so badly. So overall, it was just a really tough week for me. And this was not not fun to record for everybody. I kind of blew through those trades this week. It was just too many for me to review and effectively, really. And so, as a result, I'm unable to review these trades effectively. I just placed too many of them. And so that's something that I have to work on, because if I want to go over every single trade every single week, and then I place too many of them and I'm unable to properly review these trades, then that means I have to either take the time to review every single trade, which is what I've done off video. But I need to be more transparent with everybody and just show what I was thinking. And so I just wasn't thinking clearly. I just didn't have my head in the game, and I just wasn't on top of it. And so, I did write this quote down at the bottom. I mentioned this earlier. I have a quote underneath every single video, or I guess every single weekly journal entry. This was taken from the Market Wizards book that I'm reading right now. I'm about halfway through, and there's this guy named Larry Hite who has taken he's got a very I guess you could say program system approach to trading, and he took $2 million in 1971 to over $800 million assets under management in 1988, which is when this book was recorded, and or I guess you could say written. And on page 185, Larry Hite said that if you argue with the market, you will lose. So you better not argue with the market. I thought that since interest rates weren't going up, they should have been good for gold. And it was, and it did end up being good for gold, right? But it didn't go for gold that day. And it took a day late to end up working out for me. So I let my fundamental analysis and my understanding of the markets, I guess from a higher 30,000 foot perspective, influence my short-term decision making. And I'm a trader. I'm not an investor right now. And I need to have a more, I guess you could say, conscious bias of everything that's going on. And I can't let my bias affect my actual trading results. So overall, I lost $2,809 this week. Not good. And we're going to go into week 6 of this $500,000 account with just about $372 in profits overall in the account. Currently down about $2,891 in my overall equity breach. So I've got about 27,000 and change. 27,000 almost until I breach this account. So I still have some wiggle room. But obviously, I need to turn things around now if I want to maintain and grow this account and actually achieve a real life funded account from this prop firm that I'm trading right now. So overall, a lot to be learned from this week. And trading is never like this. You have your dips and valleys, but as long as you learn from your experiences, then you grow. And I learned a lot from this week, and now it's about applying these lessons and taking that into this coming week as well. I'm going to make it my goal to not trade more than 3 trades maximum in a day. Really try to keep it down to 1 to 2 trades per day, really. And if I've got a good profit on the day, risk some of the profits and maybe go for a 3rd trade. But really, I want to cut back in my trade so I can do a proper recap with you guys on a weekly basis. And I'm gonna do a better job at just not letting my overall 30,000 foot bias affect my trading decisions like I did this weekend. So weekly recap video number 5: the importance of consistency. Consistency is almost as important as the actual idea of physically executing your trades. And I was happy that I was fearless and willing to take the risk, but I need to do a better job at keeping track of my emotions and making sure that I'm in the correct state of mind to trade and so forth. And so week number 6 is going to be a good one. I could feel it. It's going to be something that I'm going to be proud to report back to you guys, but I hope you guys appreciate this transparency and just sheer lack of incompetence, right? I was just very incompetent this week. I shouldn't have traded. I had my head at my ass, for lack of better to describe it, and that affected my trading overall. So I need to do a better job, and that's the only way I'm going to be able to win. And so weekly recap video number 5, the importance of consistency. I appreciate you guys tuning in. If you are watching this as I go along, or if you watch, down the road after I've achieved this goal of having $1 million in trading capital, it's going to be very exciting to be able to look back on these kinds of videos and just share my progress, right? As much as it pains me to share with you guys how bad I traded this week, I know it's going to serve more people as well as myself for recording this kind of video. And so we're going to keep doing it no matter what, win or loss. We're going to keep posting and we're going to keep growing, and we're going to eventually get there. I promise you that we're going to eventually get there. But this kind of stuff just moves the needle back a little bit. And, I hate moving backwards. I only like moving forward. So, but it's only a real loss if you don't learn something from it. So I learned a lot, and I'm excited to apply these lessons towards next week and really make this week a great week. So my name is Adam Reiser. Thanks for tuning in to weekly video number 5, weekly recap video number 5, or the 13th video of this trading series. And I hope you guys appreciate this transparency that I'm posting about along my journey. And I always like to say, if nobody's told you yet so far, I believe in your dreams. I believe in your goals. I believe in you, because you're capable of more than you know you are. And I hope you appreciate that, because we're all born with greatness inside of us. It's just our responsibility is to uncover and unlock that greatness and for ourselves. So thanks everybody for tuning into weekly video number 5, the 13th video of the series. My name is Adam Reiser. I appreciate you guys, and I'll see you guys on the next one. Take care. Bye-bye.